Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a quick look here, of course, at Bitcoin. Actually, technically kind of a longer look. We're going to deep dive into some back-end data and touch on some key level supports and resistances, also some dollar cost average targets, because it does look like Bitcoin wants to break below that 27,000. Yes, thank you very much, federal government. We appreciate you. All right, that being said, if you're not a financial advisor, neither am I, but I can tell you I love teaching people to trade. Hope you can learn something here today. We've got a really awesome Twitter community here that's growing, so please consider following us there, liking, retweeting if you want to be part of something better. We have a Crypto Cash giveaway pretty much weekly at this point. We want to make sure that you can benefit there. Check that out in your own time. We've also got some cool polls here, and look at this. 25,000 versus 30,000. I asked this morning which will occur first, and 90% of you think 25K will essentially occur before we see a retest of 30,000. I kind of agree with you here, and we'll explain why in just a moment. Okay, so be sure to stick around to the end. Make sure that you learn something here today, right? That's the whole point, is to figure out what to do and how to do it yourself eventually in due time, right? That being said, let's go ahead and jump right into the back end stuff here first. And this is just something that's kind of a stark reality, but we have an increased amount of volume followed by a doji candle from yesterday. So, if you didn't see this with us having a doji candle yesterday, that's typically a good sign for the most part. I mean, oftentimes it'll reverse itself and turn itself around. But when you have this much volume to complement that, that's kind of a lot, right? And bear in mind, there was a lot of manipulation yesterday. The price went down to 26,700, all the way up to 28.3. Like, it was like a 10% range all the way throughout the day, right? Just jumping up and down. Complete manipulation. In my personal opinion, there's none of us can control that. We aren't the ones doing it. Big market movers, Silk Road, etc. They're the ones controlling that. And unfortunately, a lot of folks got caught in the crossfire, and that sucks and that happens. But you got to get back on the horse, right? That being said, tremendously more amount of longs got liquidated than shorts yesterday. We can see also that our bids are up higher, so more people are trying to buy right now than sell, which makes sense because it's a better value. Okay, the average true range is roughly 27,000 right now for the last couple of weeks, so folks feel like this is a good investment. Okay, I would agree. I have limit orders set at 26 and 25.3 as well, but generally speaking, between here and there, whatever happens, and the bottom line is that I would recommend considering adding to your position, at least your spot exchange, kind of see how that goes. We can see that the whales are in complete control here this week. So the last 3 trading days, we've seen a tremendous amount of high volume trades, and that's coming from the back end there that you really truly can't see. But once more, yesterday, with a very, very large amount of volume, we saw roughly a $277 million sell order from Silk Road. So there's some things going on in the back end there. Unfortunately, we can't change. Taking a look here at the longs, we can see a lot of longs are closing their positions, and this basically tells us the difference between the amount of open versus the amount of closing positions, and we can see longs are closing a lot of their longs. That tells us there's a lot of concern right now, the fact the price is going to drop lower. We can see a lot of shorts are kind of equal here, but they're also closing too with all the manipulation we saw yesterday. Okay, so kind of standard stuff there. What I'm interested to see here is what happens with the open interest. Okay, so if we take a look at the longs right now, longs are effectively underwater at 27.5. Majority of late longs came in at 27.5. We have some recent longs, but there's not really much to speak of there. So longs are getting kind of hammered right now. We can see shorts are in profit. Pretty much all shorts opened. Both early and late shorts are essentially in the green. So shorts are doing well right now. And what we want to look at is some bigger picture stuff to kind of see what that reflects. Because we want to identify some key supports and resistance levels. Keep in mind, we got some money flowing out of Bitcoin, of course, and we can see that here as well with Bitcoin dominance kind of breaking even, if you will, because Bitcoin price, when the Bitcoin price goes down, it's important for the dominance to stay the same. Okay, so it's good that the Bitcoin dominance is remaining the same, but it's kind of a problem in the big picture. So let's actually touch on this here really quick, just to kind of get you some perspective here, because we can see that we have a nice big CME gap up here that still needs to get filled. Okay, now keep in mind with CME gaps, they don't get filled right away. Sometimes it takes months or years, but there's a good connection there, if you will, whereas there's this magneticism where the price is going to try to pull towards that eventually once we bottom out. Now, are we bottomed out yet? Probably not. We're going to find out here soon what that looks like. But as we look at Bitcoin dominance is kind of starting to come down over the last few days, and the price came down with it. That's a normal thing that occurs. But when you look at altcoins too, these are the ones getting hit the hardest And when you see Bitcoin dominance and altcoin dominance decreasing concurrently, that tells us there's probably some kind of back-end stuff here, a lot of manipulation and or just the fact the price is going to probably come down further. Okay, so we're seeing a lot of everything right now. Okay, so it's a really weird market to trade. I would recommend kind of gravitating more towards day trading versus swing trading in the general. We are in the final stages of our day trades actually being perfected right now and getting that up and running. We just gotta wait for our web guys to kind of get that up to date, but we'll have that here for you very, very soon. But regardless of that fact, swing trades, while we've been profitable and we hit some of our targets here recently, we kind of gotta have to leave those positions open for longer than expected because of stuff like this, right? And it's just unfortunate and it's the way it goes, but that's just kind of the bottom line. Okay, so enough about that. Let's talk about the important stuff here, right? So let's take a look at some larger picture stuff, and we can see that the simple moving average is working its way up slow and steady. It's right around 22,300. While I don't feel like we're going to hit that level, that is still a thing. That's a support range. We can also see the exponential moving average essentially averaging itself out close to 25,000, and that's where we have our most amount of support. So we could literally draw a chart out here, a little green box, giving us indication that that is a support zone. Okay, because once again, previous resistance level and of course previous support, we can see that's going to work well if the price comes down that low. Now, is it going to come down that low? It's looking like so, like it will. And here's the reason why I feel that way. Take a look at the RSI, for example. RSI hasn't hit 30 yet, still trending down. We're seeing a lot of money flowing out of the coin. Money flow index is low. When you have less volume, what do you think happens? The price comes down. That's very, very common characteristic. Now, you could argue the fact that we have higher volume yesterday. Yes, that was the case. But yesterday was an ugly, ugly day. And regardless of us closing on a doji candle, that still doesn't mean anything at the end of the day. Okay, so not pretty. We also have a MACD divergence continuing here as well. Furthermore, we look at the 4-hour. Keep this in mind as well. We've got a strong MACD divergence forming right now and essentially coming through. So what does that mean for us? Well, typically that's a very strong indication the price is going to continue in the direction it's heading. Right now, we just broke 27,000, 26.9, and we could very well see it come down further. We have a tentative support here at 26,700, but that's only because the price went down to that level earlier yesterday. Okay, that doesn't necessarily mean it's going to hold, but it does imply that there is some support in that range there based on volume. Keep in mind that volume profile that we have here, it's pretty strong at this level. Let's go ahead and take a quick look at that just so you can kind of see what I'm talking about. Now we have a lot of volume in the range, more specifically at 27,900, basically 28,000, okay? But once you get to this lower 27,000 range, there's a pretty big gap. Take a look at that, it's pretty huge. Okay, so a free fall to the 25,000 range would make sense if we were to lose that support. So obviously we want to see where the candlestick closes here today. There's a good chance that we will see the price continue lower from here. So consider, hedging your longs with some shorts if you'd like, just to be on the safe side. But for lack of better terms here, it's not looking pretty. I mean, we got strong divergence with the RSI here. This is something to recognize too, which is good and bad, I guess you could say. We're getting closer to 30, which implies the price action could bounce and we could see the price continue upwards. Okay. Keep in mind with the RSI coming up and the price coming down, that can be a positive sign. Okay. So keep that in mind. We do have some strength there in that sense. If the RSI were to continue to increase and the price decreases, we have that bullish type of convergence. Okay, so that's an RSI bullish convergence there. So all that stuff put together, it doesn't really make me feel super confident, but it does imply that there's a lot more buying pressure at this range here, especially with the RSI kind of holding and not dropping really hard. Okay, so all in all, fairly decent there for the 4-hour. I'd say it's kind of a wash with that divergence plus the convergence on the RSI. So mostly neutral. When it gets to the hourly, this is where things get pretty interesting because we can see that with our TD sequential, it's jumping all over the place. And that's where you can tell that you have a funky market when the price action is all over the board. I mean, take a look at these candlewicks. These are stinking ugly. Man, it's just a mess out there right now. So again, be careful trading. Maybe best just to stay on the sidelines and wait for a little bit. But if we take a look at the Ichimoku cloud, we can see that we are stuck below the cloud, as I mentioned yesterday. Even though we were trying to break above, you want to wait for confirmation. We didn't get confirmation. We got confirmation it didn't work, that's for darn sure. And we got the price action to come right back down before it broke through. So that's where the cloud is important. It kind of is a series of moving averages holding the price action in place. So until we can soundly close above, just say 27,500, I'm not going to feel confident in Bitcoin's ability to be able to maintain itself above this. Also note too, we have this trend line here. You can kind of see this where the price action is having difficulty breaking through that area. Okay, we keep getting rejected. We cannot take this into consideration because that was kind of a bull trap, for lack of better terms, set up by, you know, I won't say names, but could be the federal government. You never truly know. And obviously, this descending trend is continuing. Okay, until we break this descending trend, there's no reason to try to take a long position into it. Buy the dip, by all means. We want to make sure that you can, add to your spot position. Speaking of which, let's take a quick look at the big picture here, because I get the question a lot. How do I effectively dollar cost average on its way down, right? Well, and the truth is, you want to take a look at some large time frames to kind of see. If we pull up the larger Fibonacci retracement levels, you can see that reaffirms the fact that we have that support at 52,000. Sorry, I'd love it to be 52. 25,300. So 25.3 is essentially that support level. We also got another support, coincidentally, right exactly where the price wick down right here at 26,638. Just say 26.6. So 26.6 is a support level, and so is 25.3. We've known that for a while, but this reaffirms that, right? So that being said, we don't have a lot of support in this range. We lose 26.6, we will probably see a wick down to 25.3, 25.5. So to me, I'm setting my dollar cost average targets every $500. So 27,000 got filled on that last night, 26.5, 26, 25.5, and then 25 even. Those are my dollar cost average targets. I'll send that out on my Twitter as well, just to kind of give you perspective on areas that I'm looking to buy, but there's no guarantees it's going to drop from here, but it certainly looks like it wants to, right? So it's statistically probable for us to see further downside. If we hold this level for a couple of days, we could see some kind of price action like this. If we see that again, then we could see another increase from here. So we're at one of those points where it's like, do we buy the bottom, do we buy the dip, or do we not? I would hesitate and urge caution not to, just based on how ugly the market is right now, as well as the federal government selling off a bunch of Bitcoin. I don't think that's really positive or great for us. And we can see here pretty clear as day that the whales are in full control right now. Okay, so we're just kind of little puppets in their little game of fun, right? So once again, be cautious, be careful in that environment, and obviously, just a quick favor, if you could please help us grow our Twitter community. Hey, look at that! We can see this change a little bit. We've got 30% of you now think that 30,000 is going to be hit first before 25K. And there's still hope, right? You never truly know. All right, thanks again so much for joining me here. Hope you have a great rest of the day. We'll see you in tomorrow's video. You take good care.